In our previous market update, we were considering a 20-week cycle peak that was approaching, and indeed the markets did form a peak, but then they only fell for a few days in most of the markets that we look at in these market updates, after which they bounced. And so in today's market update, we're asking ourselves, is that it? Was that the 20-week cycle trough that has now formed, or does that trough still lie ahead of us? Starting with the S&P 500, we had an important cycle trough in early April. That has been phased as a trough of the 18-month cycle. In most of the markets that we are looking at, it is possible that it is a greater magnitude cycle trough. And when we loop back and take a look at a longer-term analysis in the next few weeks, we will consider again the magnitude of that cycle trough. But it is, in my opinion, a trough of at least 18-month magnitude. We had our 80-day cycle trough over here in about the middle of June. You will remember that there is some question about the exact position of that 80-day cycle trough. Some analysts might position it over here, in which case it would have been a slightly late 80-day cycle trough, or you can see this analysis places it over here. That could be debated. We're not going to bother with that now. I should point out that there was some fundamental interaction around about that time which potentially caused this difficulty in identifying the exact position of that cycle trough. Of course, the difficulty when we are not able to exactly pinpoint a cycle trough because of fundamental interaction or because of the overwhelming influence of longer cycles, the difficulty with that is that it then becomes more difficult to forecast or to anticipate the exact position of the next cycle trough. Here we had a 40-day cycle trough, you can see, which has been phased under this very subtle cycle trough that formed over here in the middle of July. Here is our nest of lows for the 20-week cycle, and you can see that is centered around about the middle of August, which is pretty much upon us. And so this is the expectation that we have been working with, the fact that price is going to come down into a 20-week cycle trough. As a matter of interest, why did it not rise for 10 weeks and then drop for 10 weeks? That's a common misunderstanding about the way in which these cycles work. It is because of the combination of the multiple cycles and the influence of the longer cycles, in this case an 18-month cycle and a 40-week cycle, have been pushing up. Potentially even longer cycles are also still pushing up. And because of that, we're going to end up with a very distorted cycle. In other words, it's going to rise to a late peak and then have a much smaller decline. That is as a result of the way in which these multiple cycles combine. And so it is possible that this short move down over a period of about a week is all that we are going to see as we drop into this 20-week cycle trough. I should point out this green line here, which is called a whisker. This is the circle, which is the time that we expect the next 20-week cycle trough to form. To each side of that circle are whiskers, to the left and to the right. These whiskers represent the range of time within which one could reasonably expect, because of the principle of variation, that cycle trough to form. And so this price trough that formed over here on the 1st of August is well within the reasonable range of time in which the 20-week cycle trough could have formed. And so we need to stay alert to the possibility that this trough has formed. But now, in order to consider whether it has formed, we need to take a look at a little more detail. Let's zoom in. Looking at price action following the 80-day cycle trough in the middle of June, you can see that price crossed up above the 20-day FLD over here. That's our A category interaction. At the time that this 20-day cycle trough formed at the end of June, price would have been expected to find support at the level of the 20-day FLD. It did not. It was way above the level of the FLD. Why is that? Again, because of the influence of the longer cycles, the bullish influence of the longer cycles, which is distorting this cycle in a bullish direction. We've discussed this in previous market update videos. The 40-day cycle trough, according to this analysis, occurred over here in the middle of July, where price came down and did in fact find support at the level of the 20-day FLD. This is not unusual, I should point out, in bullish underlying trend conditions. In terms of our labeling of the interactions, these would have been a D and E category interaction, unusually finding support at the level of the FLD instead instead of crossing below it and then crossing above it, but that is because of the bullish underlying trend. This then would have been our F category interaction as price crossed down below the FLD. Notice how price fairly accurately achieved that target for that price cross down below the 20-day FLD, and then it immediately bounced up again. At this point, you can see that in this analysis, the analysis is considering this as a 20-day cycle trough, with the 20-week cycle trough still lying ahead of us. But there is an obvious anomaly. Usually what would happen in this final 20-day cycle as we approach the 20-week cycle trough is the price would come back up to the level of the 20-day FLD, as it did, in fact, at the end of last week. But at that point, it would be expected to find resistance at the level of the FLD. It is, of course, possible that the bullish underlying trend is so strong that it has pushed price above that FLD. But if that is the case, price must fairly soon cross back down below the FLD to form this 20-week cycle trough. Of course, the fact that we have these whiskers for the 20-week cycle over here raises the question of whether this is in fact the 20-week cycle trough that has formed. We're going to take a look at a chart in a moment that describes that situation, but I will point out here the importance of the 20-day FLD. As mentioned, this would be labeled an F category interaction as price crossed down below the FLD. In very bullish underlying trend circumstances, the G and H category interactions are sometimes skipped altogether and the longer term cycle trough is formed, meaning that this would be an A category interaction. This has generated a target way up here, and we would expect that target to be achieved. Furthermore, when price comes back down to the 20-day FLD, as it inevitably will, we would expect that 20-day FLD to provide support if the 20-week cycle trough has formed. And that is going to be the deciding factor for us. If this analysis is correct and the 20-week cycle trough still lies ahead of us, then when price next touches this 20-day FLD, it is expected to accelerate down through the FLD on its way to the 20-week cycle trough. If, on the other hand, it finds support at the level of the 20-day FLD, we will accept that the 20-day cycle trough lies behind us and has formed on the first day of August. This slight anomaly can be visualized very clearly by looking at the composite model line. This is a line that takes all of the cycle analysis information in terms of the wavelengths and amplitudes of all of the cycles, recombines them and displays it on your chart. In the past, it indicates what would have happened if the only thing influencing this market had been the cycles. In the future, it assumes that the cycles are going to continue beating with the same wavelengths and amplitude, which is, of course, a flawed concept because of the principle of variation. We know that the wavelengths and amplitudes of these cycles will change. Nevertheless, the composite model line provides a very useful way of visualizing the analysis, and that is really all that it is doing. It is not predicting the future. We cannot predict the future, and certainly the software cannot either. But what it is doing is it is presenting the information contained in the analysis. And you can see that according to this analysis, price was expected to bounce out of this small 20-day cycle trough over here and rise up a little bit, but then turn back down in order to form this 20-week cycle trough. And this is the discrepancy that we are now faced with. Price has not turned down. Potentially it will turn down today, but it has not done so yet, which is why we need to be asking ourselves whether the 20-week cycle trough has formed. As a matter of interest, we can explore that possibility by taking a look at this analysis here. In Sentient Trader, of course, we can influence the analysis and we can have Sentient Trader present the analysis that we believe is correct. Here you can see you have an analysis with the 20-week cycle trough already identified on the chart over here on the 1st of August. I should point out a few things about this, however. You can see that 126 days have elapsed since this important, at least 18-month magnitude cycle trough in early April. The average length of the 20-week cycle discovered by Hurst over 50 years ago is 136 days. And so, as of today, we would normally still expect another 10 days to elapse until that 20-week cycle trough forms. And so this is certainly an early 20-week cycle trough, you can see occurring at 116 days. In my opinion, it is premature to label this as a 20-week cycle trough already on your chart. The other thing that I would like to point out about this analysis is that the phasing of the shorter cycles is not nearly as good as it is in the other analysis, and this is worth spending a moment explaining. Let me zoom in here. People often ask me, how can you say, is this a good analysis or isn't it a good analysis? And this provides us with a very good example. The simplest and most obvious way of determining whether an analysis is good is to ask yourself whether the troughs that have been positioned using these diamonds at the foot of the chart actually match price troughs in the price action. And if we take a look at this, you can see that, in my opinion, this is not a good position for the 80-day cycle trough. I've already mentioned the fact that there was some fundamental interaction, but certainly here, or indeed there, would have been better positions for this 80-day cycle trough. Similarly, this 40-day cycle trough that has been phased over here in the first week of July is beneath a price trough that is really not very significant at all. A much better position for that is over here, in my opinion. And so, although we can persuade Sentient Trader to position the 20-week cycle trough as having formed on the 1st of August, and we certainly need to remain aware to that possibility, I do not believe that this is the better analysis. Therefore, I am saying that I do not believe that the 20-week cycle trough has actually formed. However, we do need to remain aware of this possibility, which is why I will keep watching this analysis. Here again, we have the potential, a category interaction, as price crossed above the 20-day cycle FLD. The critical deciding moment will come when price next interacts with the 20-day FLD. Of course, if you want to be watching shorter time frames and shorter FLDs, you are very welcome to, but in terms of the kind of timing that we speak about in these videos, the 20-day cycle FLD works well for us. Here is the nest of lows for the next 20-day cycle trough. If price comes down to the 20-day FLD, finds support at about that time, then we would accept that the 20-week cycle trough is behind us. If, however, price turns down and crosses strongly below the 20-day FLD, we will accept that the 20-week cycle trough still lies ahead of us. Now, there is a third analysis possibility that also presents the 20-week cycle trough as lying ahead of us, and that we're going to take a look at in the Nasdaq. We're looking at it on the chart of the Nasdaq. Simply to speed things up a little bit, you can perform exactly the same analysis in the S&P 500, of course. We have our big cycle trough over here on the 7th of April, and in this case the 80-day cycle trough is displaced a little bit to the right. In other words, this cycle trough occurs slightly late. If we measure the number of bars up to that 80-day cycle trough, you can see there were 77 days. That's not impossibly long for an 80-day cycle. You might think it sounds slightly short, but in fact the average length of an 80-day cycle is 68 days. Again, if you do not understand why the average length of an 80-day cycle is 68 days, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video. And so at 77 days, that is not a very long 80-day cycle, but it is certainly slightly long. If we then position the 40-day cycle trough, as you can see has been done in this analysis, at the recent trough on the 1st of August, that is a cycle of 39 days, 5 days longer than the average 34 days of a 40-day cycle. And so this analysis actually works really well. Again, the way that we consider the accuracy of an analysis is we take a look at these cycle trough positions and ask ourselves, are there matching troughs in the price action? And in terms of this analysis, we can say that there certainly are. And so this analysis looks good to me. This analysis tells us, of course, that the 20-week cycle trough still lies ahead of us. Notice the circle for the 20-week cycle is later than it was in the analysis we were looking at in the S&P 500. Why is that? Very simply because according to this analysis, the these cycles have been running longer. Remember, we measured a length of 77 days over here for the 80-day cycle. That is a cycle that is running longer. So too is the 40-day cycle running longer at a recent length of 39 days. If we consider the recent average wavelengths at the bottom right of the chart, you can see that all of these cycles have, according to this analysis, been running long. Now, when cycles are running long, there are two possibilities. The one possibility is that they will keep running long because cycles beat with a certain regularity. The other possibility, of course, is that the cycles will start shortening because we know, with the benefit of over 50 years of hindsight, that looking back and averaging these cycle lengths, they will tend to average to the same length. And so the 80-day cycle needs to return to an average length of 68 as opposed to 80, which is the recent average wavelength in this analysis. In order to achieve that shorter average, we're going to need some shorter 80-day cycles to occur. So how do we know which of these two things is going to happen? The first sign that we will have that the cycles are shortening will come in the shorter cycles, as we see 20-day cycles coming in at 13 days and the 40-day cycles coming in at about 28 days as opposed to 34. We will then see that the cycles are beginning to shorten. The shorter cycles, of course, will give us advance notice and we will be able to adapt. But we have no evidence so far that these cycles are shortening. And so, in my opinion, this analysis is the better analysis to be watching at the moment, not only in the Nasdaq, but in fact in almost all of the instruments that we are tracking. You can see here the composite model line indicates that we would get a bit of a bounce out of this 40-day cycle trough. But the important thing is that we're going to have another peak forming soon. The composite model line in terms of level indicates the peak should be slightly lower than this earlier peak, but whether it is a lower or a higher peak will depend very much on that underlying trend. It is a bullish underlying trend, and so a late peak is not out of the question. Then price is expected to come down into this 20-week cycle trough, still lying ahead of us. And so I could have shortened everything that I said so far in today's video and say that my preferred analysis is that the 20-week cycle trough still lies ahead of us. It is expected now towards the end of August or early September. The reason it has been pushed ahead is because the analysis works better on the assumption that these cycles are currently running long. One of the very useful principles that Hurst defined is the principle of commonality, which tells us that markets tend to move with a great deal in common. That's a rather dry way of expressing it. A more practical way of expressing it, in my opinion, is that we can understand what's happening in one market by taking a look at an analysis in another market, particularly if those two markets are both stock markets. And this is the Australian stock market, the ASX index. And this analysis has helped us over the past few months to understand a little better what has been happening in the US markets. And this analysis too is presenting us with effectively the same situation as I have just presented in the Nasdaq. We have our big cycle magnitude trough in April. We had 126 days elapse since then. We have another 10 days to go to achieve the average length of a 20-day cycle. We have the 80-day cycle trough over here on the 23rd of June. 49 days have elapsed, which means that we have another 18 days to go until the next 80-day cycle trough is expected. The 40-day cycle trough has not yet been positioned in the Australian market because of this rather subtle and not very clear price movement. Let me just zoom in here and take a look at that. It would seem likely that the 40-day cycle trough occurred over here on the 4th of August. Just after the weekend. Bear in mind, of course, that the Australian markets are displaced in time from the US markets, and so a trough on Friday in the US markets will often reflect as a trough on Monday in the Australian markets. There's our 49-day bar count. We're still expecting another 18 days. For those of you who like to see the interactions between price and the FLD labeled, here are the interactions between price and the 20-day FLD. We have a good clean sequence of interactions, A, B, C, D, E. The next interaction is, of course, expected to be the F category interaction. We have a high rating for this interaction at 61.1%. That's a good rating, and so that increases my confidence in this analysis. I think it is likely that the 40-day cycle trough formed, as it probably did in the Nasdaq and also in the S&P 500 over here at the beginning of August, and that our 20-week cycle trough still lies ahead of us. It is clear, as you can see from this sloping nest of lows, that the shorter cycles have been expanding. And so even though we have a circle and whiskers for the 20-week cycle trough over here, the shorter cycles have been pushing that time further forward. Notice the composite model line, this orange dashed line, is telling us not to expect a higher peak, but that's because at some point, according to the cycle information that we have, this price has got to start moving down into the 20-week cycle trough, and the composite model line process has not measured enough bullishness to create a higher high at this point. However, that bullishness is clearly there, indicating that the underlying trend is certainly still bullish in this market. In the DAX, another market that we have used for the process of commonality to compare markets around the world, we have in fact exactly the same situation. We have our 18-month cycle trough over here on the 7th of April. We have our 80-day cycle trough over here in about the middle of June. And over here, according to this analysis, we have our 40-day cycle trough over here. And then this is only the 20-day cycle trough. Notice how in the DAX we do not have the same anomaly, if you like, that we have in the US markets, because price, although it has bounced out of this 20-day cycle trough, has only so far come up to the level of the 20-day FLD. It has by default, or by mistake, if you like, slipped over the FLD during the weekend, but so far in early market action today, on Monday the 11th of August, price is heading down again. For the moment, I continue to expect the 20-week cycle trough to lie ahead of us. Again, the critical deciding factor will be how price reacts to this 20-day cycle FLD. We do expect it to cross below the FLD to reach the 20-week cycle trough, but if it finds support at the FLD, we will need to accept the possibility that this 20-week cycle trough has formed in this market, as it just could have in all of the markets that we are looking at today. Here is the Nifty, another market that we have been looking at for the purpose of commonality. Here we have a big cycle trough also forming on the 7th of April. Here we have the 80-day cycle trough forming over here, again in about the middle of June. Notice these pin symbols. This is because I have influenced this analysis. The Nifty is notoriously difficult to analyze because, in my opinion, of currency fluctuations, and also because of the fact that it is a very different market in India to the kind of market that we have in the US or in Australia or in Europe. These factors complicate the cycle analysis, but they do not eliminate the usefulness of a cycle analysis in considering what is happening in the market. You can see that troughs form at the same time in the Nifty as they do in other markets around the world. The big question mark really is the position of this 40-day cycle trough over here, because we have had a fairly steady downwards movement. Nevertheless, this market looks very similar to the other markets we are looking at. We are now expecting the 20-week cycle trough to form slightly later. You can see that the center of gravity, if you like, of this nest of lows is displaced by a week or two ahead of us. And again, we have similar bar counts, and so we are looking at another 10 days for the 20-week cycle and another 9 days for the 80-day cycle. It is most likely that the Nifty is now bouncing out of a 20-day cycle trough over here, and this will be the final 20-day cycle in the 20-week cycle. However, we must remain alert because of these whiskers and of course these circles for the 20-week and 80-day cycles, which are focused on later this week. It is possible that this 20-week cycle trough is forming now. The Nifty might be ahead of other markets in terms of forming this trough. It does not have to happen on exactly the same day in all these markets. Here is the composite model line. It's a fairly good match for price action, which increases my confidence in this analysis. And you can see it indicates that we are looking for one more move down. But bear in mind that the composite model line is not a crystal ball. It is not predicting the future. It is simply telling us that according to the analysis we have on our charts, this is what we should expect. We need to stay on our toes for the potential early formation of the 20-week cycle trough. Gold has been moving net sideways for really rather a long time. As you can see, I discuss this in every one of our market updates. We have had several attempts at this peak level at $3,450 roughly, and usually in gold we would expect a sharp isolated peak because gold forms peaks in a manner that demonstrates that probably the cycles are influenced at their peak, which is why I continue to expect another higher price in gold. The next occasion for that would be this 20-week cycle peak, which you can see is off to the right of our chart at the end of August or probably early September. Both of these analyses have actually been working fairly well. They are both looking very good in terms of their rhythm, and this is something that will happen when you have price trapped in a sort of a wedge formation like this. You will find that both peak and trough analyses look quite good. We need to be prepared for the breakout from this wedge. According to the trough analysis, we had a 40-week cycle trough over here in the middle of May. Here is the 80-day cycle trough that we were expecting to form soon in our previous market update, which of course I recorded on this day over here on the 28th of July, and indeed that 80-day cycle trough did form just 2 days later. I am displaying the identification of the sequence of interactions, and you can see the rating of that sequence of interactions is 66.7%. That's a good, highly reliable sequence of interactions. We would next expect price to find support at the level of this 20-day FLD. And in fact, if we zoom in here and take a look at the composite model line, you can see it matches fairly closely. This is an interesting composite model line because I am combining both the trough and the peak analyses in this composite model line, which is an interesting thing to do when you have both analyses on the chart. Here you can see the composite model line indicates that we are expecting price to continue to move upwards following the 20-day cycle trough. Finally, Bitcoin. It always amuses me that everybody assumes that Bitcoin, because it is a new instrument, it's a disruptor, if you like, in financial markets, they assume that Hurst cycles, discovered 50 years ago, wouldn't work for Bitcoin. In fact, they work extraordinarily well, and the rhythms that beat in terms of influencing Bitcoin tend to be even purer than some of the rhythms we are seeing in stock markets. And we have a similar situation in Bitcoin as we have in most of the stock markets that we have looked at today. We have a big cycle trough that is in this case only of 40-week magnitude forming over here in the second week of April. We have our 80-day cycle trough, a much clearer trough than we had in the US markets forming over here in the third week of June. Here again we have our nest of lows for the 20-week cycle trough that still lies ahead of us according to this analysis. Here is the nest of lows for the 40-day cycle trough. You can see that 40-day cycle trough nest of lows is fairly spread over to the left, indicating that the shorter cycles have recently been expanding. That's an important point. I mentioned earlier, how will we know whether the cycles are going to continue beating with longer wavelengths or whether they're going to shorten? And the key is in watching the shorter cycles. This analysis clearly is showing that this is the 40-day cycle trough that has formed in Bitcoin. It formed late, as you can see from this circle, although I've drawn over it, but the circle for the 40-day cycle was beneath about this price over here. That was probably about the 25th of July, and that was certainly a possibility for the 40-day cycle trough. But this situation, I believe, is very similar to the situation that we looked at in the Nasdaq, and so I think it is likely that the 40-day cycle trough formed over here, and that therefore our 20-week cycle trough still lies ahead of us. If we display the composite model line, you will notice the discrepancy that has occurred with the recent price action, because the information contained in the analysis would lead us to expect a lower peak, as you can see from the composite model line. The composite model line is not very accurate in terms of projecting price levels, because the amplitude of the cycles that contributes towards those cycle level projections is, in my experience, the least reliable of the cycle aspects. Wavelengths are much more reliable than amplitude, and so this lower expected peak is simply because, of course, we would expect this second 40-day cycle to have a bearish shape, compared to the previous 40-day cycle. The fact that price has jumped up is merely an indication of the excessive bullishness in this market. Again, potentially that trough in April should be of even higher magnitude. We definitely have longer cycles pushing upwards. Again, the real key to understanding whether the 20-week cycle trough has occurred early, it is just possible, in Bitcoin, is to consider what happens when price interacts next with the 20-day cycle FLD. We are expecting, according to this analysis, for price to cross down below the 20-day FLD on its way down to the 20-week cycle trough. And if we display our labels, the interactions between price and the 20-day FLD, you can see that we have a good clean sequence, an A category interaction, BC category interaction where price found support at the level of the 20-day FLD, a rather messy D category interaction where price spent over a week crossing down below that 20-day FLD, and here is our E category interaction as price has crossed above it. We would expect an F category interaction next as price crosses down to achieve this 20-week cycle trough expected end of August or early September. If, however, price finds support at the level of this FLD, we need to consider the possibility, as we have to in the other markets, that the 20-week cycle trough has formed. But in my opinion, it is more likely that the 20-week cycle trough still lies ahead. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. YouTube has stopped informing me of those comments, I should point out. It used to send me an email, which was very useful. It seems to have stopped doing that, so apologies for any delay in responding to your questions and comments. Or you can join us on our Hurst Cycles Discord server. I look forward to hearing from you.